Uh, let's start recording YouTube. Thank you, Mike. Today, I'm looking forward to talking with you on YouTube.
I'm looking forward to our conversation. Very excited.
Yeah, me too. For the first time, Mike, I want to ask you introduce by yourself a little. What do you do or something? Please introduce by yourself.
I'm sure. So I'm Mike Schatzman. I'm the co-founder and managing partner of New Leaf Ventures. We operate an early stage VC fund, primarily focused on the seed stage. We're a multi-strategy fund, so we participate in a number of different sectors. Our investment thesis is really centered around remarkable entrepreneurs who are building companies to tackle meaningful problems. Myself personally, I'm a corporate America citizen. I've been a part of a number of different companies before venturing into the entrepreneurial route. I've started 3 different companies, have had some successful exits,
Cool.
and have also been an early stage angel investor and operating out of a small family office before starting our VC firm.
Okay, thank you for telling us. It's very interesting, and so I listened your story, and I was very excited. So I want to ask you more concrete questions. Mike, how did you collect your money when you started the first VC fund?
Well, it's a great question. The first thing we did is put in a lot of our own money. So, like any business, it's important that the founders really believe in their own product. It's something that I really subscribe to. And we, my partners and I, put in a lot of our own funds to get it started. And then we shared our vision with people that we knew that were close to us, other people that have made some investments with us. And through some co-investments and more networking, we were able to really find a number of people that could align with our vision. And that's how we've started to raise additional capital outside of our own capital. We are still in the early stages of raising our fund because we put most of our own capital to work at first. And we're excited, really excited about the reception that we've been getting in the marketplace.
Okay, thank you for telling me. I remember for the first time you ran your restaurant in Chicago. Is it correct?
That's correct. So
Yeah,
my first foray into entrepreneurship was
yeah.
starting.
Please tell me.
I'm an independent restaurant that's still in operation today. I had no background in the restaurant space, so I kind of dove head in, but had did a lot of homework in terms of the concept that I was developing and was able to put together a great team of people to get it off the ground. And we are very fortunate that it's been a great success.
Cool. But the type of restaurant is Japanese restaurant.
That's correct. Sushi and barbecue bars. So our whole
Okay.
concept was uniting Japanese cuisine with a distinctly American persona. So we took all the great elements of Japanese cuisine and presented them in a very casual, friendly format with a lot of meats and seafood that people were familiar with, and then infused our own take of Japanese flavor profile into into the mix.
I see. But in Chicago, you decide start your restaurant, Japanese style restaurant. Why did you decide Japanese style restaurant in Chicago?
Well, I ate a lot of Japanese food. When I traveled for corporate America, I would always spend a lot of time eating at the sushi bar, especially when I traveled myself. I'd like to eat out and experience culture outside of the hotel room. So I found myself eating at the sushi bar because it was always great to interact with the sushi chef versus sitting at a table by yourself. That's not really fun. So I really got to take a liking to Japanese cuisine, and I spent a lot of time traveling on the West Coast, also in London, and I started to discover all these different great flavor profiles beyond your basic sushi rolls. And I saw a huge opportunity to do something in Chicago that wasn't really done before. And sushi is a great style of cuisine. It's very versatile. Also, it's something that people don't make at home. So whenever you're starting a business, you always want to make sure that obviously you have product market fit, but the market can keep out, there's demand out in the marketplace. And I knew with this type of cuisine, not only would it be great for takeout, but it's something that people often seek out maybe a little bit more than other style cuisines that they may be able to cook at home. So we saw that as a huge opportunity. Plus, I really fell in love with the cuisine. It was great. It's great to eat. You can go. It's Japanese cuisine, something you can eat 2 or 3 times a week. You don't really get tired of it. It can be light too, so you don't feel as heavy eating it like you do with other cuisines. So that there's a lot going in its favor at the time, and that's what really led me to create the concept.
Okay, thank you for telling me. But you start your Japanese style restaurant, sushi style restaurant. You learned a lot to eat sushi or something to travel around. And when you come to Japan, I own sushi restaurant. So I want to try to make and eat sushi with you, and I want to learn from you. Our
Right,
sushi restaurant style is not only eating but also making sushi with
right.
each other. Yeah, thank you for telling your first story. But after that, you own three, I think about 3 restaurants, and you sold this 3 restaurant. After
Yeah,
that, you make a little money and invest to your venture capital fund. Is it correct for the first time?
that's right. I mean, investing as an angel was always something I was doing on the side. I just really never got serious about it until I was able to have some successful exits under my belt, which freed up a lot of time to really explore that path. Being an entrepreneur myself, and then also having experience investing in a lot of different funds, really ignited the fire for me to explore everything there is about VC and the opportunities that exist backing early stage entrepreneurs. And for me, it's really great to seek out people that are passionate about certain problems in or a lot of different sectors that exist in the marketplace. But it's really all about identifying with who the entrepreneur is, what they're trying to solve, the team that they're trying to build, and how motivated they are, because entrepreneurship is not an easy path. A lot of people see all the success stories that are written all over the news, but it's anything but a straight line up. there's
I know.
there's a lot of highs, a lot of lows, and for me, experiencing that at a younger age, I saw an opportunity to really take what I've learned and incorporate that into my investment philosophy and make decisions on what I would consider early stage businesses that we think could, have a higher likelihood of success, over the next 8 to 10 years.
Okay, thank you for telling me. But I want to ask you, when you start your venture capital for the first time, have you worked in some venture capital fund or something? No?
I did not. My experience was really myself operating as an angel investor and then single family office for a couple of years. So really what I did when we established our VC fund is we institutionalized what we were doing before. We were syndicating a lot of deals with friends and co-investors. So my experience did not lie in with working for a larger VC style firm, but it really lied in my own personal experience co-investing with a number of friends that really led me to get that experience under my belt before I really felt confident in launching our firm and fund.
But Mike, how did you learn how to invest? I think I understand you have experienced a lot as an entrepreneur, but before starting invest as a venture capital, you haven't experienced work in huge venture capital or something. So how to learn invest?
Well, no, it's a great question. It's not easy. Well, you learn by making mistakes, first of all. And, my learning just involved being around the public markets, having a lot of friends that were financial advisors. But it really all started in investing in myself. When you look at people that are entrepreneurs, sometimes they don't realize that they're learning a lot more than they think. I invested in myself when I started my businesses, and we made a lot of decisions. We reinvested in the businesses itself as they grew. And those were some of the most valuable lessons you learn in terms of how to be smart with your cash flow, where to choose what to invest in, but also developing a longer term time horizon with specific goals and objectives. So that's really where a lot of the learning took place in terms of me investing in myself and running my businesses. And then, the real current learning came from seeing a lot of different deal flow. So just really getting out in the marketplace, aligning yourselves, attending conferences, on different webinars, aligning yourself with different investment groups, really talking with other people. The investing, you can sit and watch, many different types of shows or online curriculum. But, in my opinion, the best learning happens when you get your feet wet. And so looking at a lot of different investment deals, meeting a lot of different entrepreneurs, that's really where a lot of the learning took place on what people are trying to do, deal terms, deal flow, all those different types of things when you're looking for investments.
Thank you for telling us how to learn invest. It's very intriguing for us. Oh, thank you. And learning how to invest. And now you started venture capital, New Leaf Ventures, the GP position. It's awesome thing, I think. I respect you. But Mike, what is the value for entrepreneurs that do a VC fund, New Leaf Ventures, investing?
Oh, great question. Our value is we've been in their shoes. And so we're a team of entrepreneurs, and myself, I've starting businesses from the ground up is not easy. And very oftentimes an entrepreneur is starting a company to solve a specific problem because he or she has a very specific expertise in the space, or has found an opportunity that no one has really gone after in the sector. But for the most part, a lot of these people can be first-time entrepreneurs. Obviously, there are some repeat entrepreneurs who tend to obviously receive more demand sometimes with funding when they've already had a couple successful exits under their belt, just like any fund that's successful. But for the most part, these people are first-time entrepreneurs, and they're opening themselves up to an entirely different world of it doesn't, it all starts with them, but it starts with really the team of people that they put behind them, the resources that they align themselves with, and how they can manage costs. We live in today's day and age. Funding's a lot different now than it was 2 or 3 years ago. And mistakes can be made early on that can be detrimental to the success of a business. And so the value that we bring to the table is all that intangible advice that some people wish they would have had when they look back on some mistakes that they made at an early stage. And having gone through that, made some of those mistakes, had a lot of success. It's something that we've seen in all different types of companies, whether it's a pet pharmaceutical company to an early stage B2B SaaS company, or it's an upscale ice cream company. All these people are going through similar things, and our ability to help coach them and give them key learnings from things that we've gone through, I think is extremely valuable at an early stage, especially in this type of environment.
Okay, thank you for telling me. I think it's a good idea for entrepreneurs to ask your fund to help. Yeah. Okay.
And like I
And
said, sometimes we're not the largest check, but sometimes we're the largest mind. And, that is gratifying for us when we're able to deliver on strategic advice to these entrepreneurs.
gotcha. And Mike, I want to ask you, how do you think about great entrepreneur and great investor? Is same thing? Great entrepreneurs and great investor are different talent or something. How do you think about it? You told us you have experienced as an entrepreneur. After that, you became an investor and you help entrepreneurs using your experience as entrepreneurship. And so I want to ask you if we want to become good entrepreneur or investor, if we can become good entrepreneur, we can become a good investor. Is it correct or it's different?
No, I think there's some parallels. The biggest thing is to
Parallel.
take a step back and look at the bigger picture. I think being a great entrepreneur, you're operating the business, you're in the mix, you're wearing 10 different hats all at the same time. And I think some of the mistakes entrepreneurs make is they get too caught up in the day-to-day emotions. It becomes very emotional for them when you're on this roller coaster of a ride. And what I've learned is being a great investor requires you to step back and look at the bigger picture. And I think that's really the distinction of where the entrepreneur can turn to become a great investor. But I think skill sets are there. I think being a great entrepreneur, you've seen, can be the prerequisite to being a great investor. I think, being a great investor and then being a great entrepreneur, that sometimes can be a little bit more difficult because you're going from such a macro lens to being involved in the thick of the operations, but it can be done. But I think there's some parallel traits, but really I think what it requires is to really step back, look at the bigger picture, because a lot of the times, entrepreneurship is emotional, and we all know that, when we get emotional, sometimes our decision-making process can get altered. And so learning that has been a huge valuable asset for me. And it's also allowed me to look at when you're making an investment, you're essentially, you are obviously voting and making an investment in a company. At an early stage, you're really betting on an entrepreneur. And so your money is going behind the jockey. And that's really the most important thing, is to understand that who you're placing your bet with, and not only doing due diligence on the company, what they're all about, but really getting to know the founder or the group of co-founders extremely well before deciding on making the investment.
Oh, thank you for telling us. It's intriguing, and being good entrepreneur and being good investors is parallel thing. So yeah, thank you for telling us. Okay, and Mike, I think now you are collecting money from investors and you try to invest good entrepreneurs. And how amount of money do you wanna collect by LP investors now?
Well, our goal is, our fund target is, a little north of $5 million. Everyone's revised their targets in today's marketplace because the funding environment has changed so drastically. But, we're an emerging manager. This is our first fund. Right now we have close to 3 million, with including our total commitments, which we're extremely proud of, given the type of fundraising environment that we're in. But it's hard to put a goal on a number. That's kind of our target range. Our larger focus is in making investment in quality companies. So, we had a target to invest in 25 to 30 companies across a diversified asset class, being a multi-strategy fund. We're a little less than halfway there. And so I think if we're successful if we get to 25 or 30 companies under our belt, which we deem to fit our investment thesis or profile. That involves investing a little bit smaller denominations than we originally hoped for. We're okay with that, but it's more about having a diversified group of high quality investments under our portfolio.
Thank you for telling me. And I want to ask you, what amount of money is the minimum ticket size?
Well, a minimum check size into our fund usually ranges between about close to $100,000 is the average check size. We have larger check sizes into our fund, but that's usually what we look for now, especially now that we've had 14 investments that we made, a number of up rounds. Our fund has shown some great progress over this past year in the face of declining early stage market. But for us, just like an entrepreneur wants to have great investors, for us it's the same. We want to align ourselves with a group of great investors that are a part of our fund. We've had a couple of our investors that have brought us some incredible opportunities that we've invested in. And so, we get excited when somebody sees value in what we're doing and wants to learn a little bit more. We're happy to educate and coach them. I mean, we're a young team of entrepreneurs that learn this, the hard way. And so if there's people that really want to understand what early stage investing is all about, we love them to be a part of not only our network, but are really excited when they want to become an investor in our fund.
Okay, gotcha. Okay, I asked you all the questions, but last question. If you have something you want to say to audience, there are many audience who invest some companies as angel investor, and most of the people are Japanese investors. It is because I'm from Japan. Do you have what you want to say last?
All we say is we look for, while we call them investors or LPs, we really call them partners. So companies that we invest in, we offer opportunities for our investor base to make co-investments, whether it's through their own personal funds or their own LP. We don't do any SPVs. We don't charge any fees, but we really believe in this asset class. It is a high risk asset class. So obviously, when people, depending on how far along the risk curve they want to be in their portfolio, it's something that people need to consider. But I think it's important for early stage investing to be a part of everyone's portfolio. Even though it is known as the asset class that can deliver outside returns, doesn't mean people need to put in more money than they can handle in this space. But it embodies everything you want to learn in entrepreneurship. It embodies how to do due diligence, learn new sectors. I mean, everything that's about investing is in this space. And it's not easy. And, if I can give anybody advice, it's investing is a team sport. And it's something where I've come together with a group of friends to create a fund, because investing by yourself can be very lonely. It can also be emotional. It can cause you to make the wrong decisions. And so, working with others that may have a different viewpoint or not as experienced as you in the certain sector can be one of the greatest things you can do in investing, because it allows someone to really showcase a viewpoint or an angle that you might not necessarily think of. Because once you do make these investments, there's no turning back. The early stage VC sector, it's not like the public markets where value goes down. It's liquid and you can sell and recoup some of your money back. So it just requires rigorous due diligence, thought process. It's not a gambling. It's not legalized gambling as some people look at it. but it really embodies everything. You really got to treat it as if you're starting your own business. When you're making an investment, you almost have to treat your investment as if you would be starting the exact business that you'd be investing in. And it's a lot of work. A lot of people don't want to take the time to do all the work to do that. And that's what, it's extremely challenging. It can be very rewarding. And I think it's an incredible asset class that more people should have exposure to.
Okay. Thank you for last message. So we will share Mike's venture capital information, New Leaf Ventures. If you want to invest to his venture capital fund, please contact Mike or me. We will share some information on YouTube channel, this YouTube channel, comments zone. So please contact us. Mike, thank you for today. I was very enjoyable time. It was very enjoyable time to talk with you today.
Thank you so much. I enjoyed it.
Thank you. Bye-bye.